If you're considering a big remodel to your home or to add an ADU or to add units to your home, this video is for you. Or if you just want to customize your home with luxury. This video is going to explore different types of construction loans from FHA renovation, USDA renovation, VA renovation, home style, home possible. All of these different loan programs can make a big difference for your wallet and your home. Construction loans have seen a huge uptick in the last 5 years. Why is that? It's because home prices have soared, the real estate environment has become more difficult, and we have higher interest rates. So in this video, we're going to explore all the different ways that you can add value to your house without having to sell through construction renovation loans. And before you watch the rest of the video, please like and subscribe below. Thanks again for watching. Now, what is a construction loan? So construction loans are typically short-term financing that allow the building of a new home or significant remodeling on your current home. Now, how do they work? Well, the funds, they're dispersed typically in phases through project milestones. Typically, these loans will require principal and interest payments or interest-only payments, and they may also allow you to finance the payments into the construction loan as well. Now, with the interest rates on this loan, yes, they're a little bit higher than your typical loans, but they're still the most cost-effective way to borrow money for construction. Now, if you're looking for smaller renovation loans, we'll be looking at the FHA, like 203K loans, or we're also going to go into depth for larger types of loan types for full renovations as well. With construction loans, they're not like traditional loans. There are a few more things that you'll need to prepare for and need to prep to make sure that everything fits inside your project the exact way that you want to and with the loan parameters. First, you'll need to set up draw schedules. Lenders are going to release funds to you for your construction project based off different phases and milestones that you have completed. Now, during this time frame, you'll also need to pass different types of home inspections that you will have to set up with your county and state governments, which means it could take some time. During these phases, you'll have to pass those in order for us to distribute the funds. As an example, let's say we're doing a $500,000 remodel and we have 5 different stages. There's going to be 5 different inspection periods that the lender is going to check on your project to make sure the work was completed per the construction plans that you submitted before we sign off and wire that amount for that phase. Now, as you're designing your construction plans and your overall project, here's something I'm going to promise you. Things will go wrong. Construction always goes over budget. Unexplained things happen, unexpected things happen, so always plan on at least a 15 to 20% override factor, meaning you're going to go over budget by 15 to 20%, and that's something you want to prepare for. If it doesn't happen, great. If it does, you already planned for it. Now let's run through some different types of construction loans depending on your projects so that you can evaluate the best option for your best project so that you save the most time and make the best use of your money. Now, there's also timestamps in the video so you can fast forward ahead to them as well if you like. There are 2 main types of construction loans. They're done by Fannie Mae and they are called home style. So let's take a look at them. The first one is called a construction to permanent loan. Now, the benefits of this one is you can take the combination of buying the home and the construction all into one loan where the project has to be completed within 12 months. This thus eliminates the fact of having to get a second loan and a second closing. This is the best for borrowers who want simplicity and cost savings on their closing costs. The second Fannie Mae product is called a 2-time close. Now, the 2-time close is for people that already bought the property and they weren't in the middle of a project and maybe their project went over cost or they needed more money or all of a sudden they realized they can use the Fannie Mae 2-time close to find a better project with better financing terms to complete their overall project. This is best for borrowers who need more time to shop around to find the best financing for their project, or after they already started construction and found that they went over in cost. A quick way to summarize this home style product from Fannie Mae is, example, you identify your perfect home and you look at it and you go, I know I'm gonna need to renovate this, but I wanna buy the home with one loan right away. If that's the case, you wanna buy it with the construction to perm. Another simple way to look at the Fannie Mae product is you bought the home already, you didn't realize that you're gonna need to make a bunch of repairs, and now you're gonna use the 2-time close loan to pay for all those repairs you didn't anticipate. Now let's run through the renovation loans. These are a little bit simpler. First, let's take a look at your FHA one. Your FHA renovation loan requires a 3.5% down payment. There's two different versions of it. One version is for repairs of $33,000 and less. The second FHA renovation loan is for larger budgets and beyond, 100, 200, 300K. Both of them are great projects and they have a little bit more flexibility than some of the other ones. Most importantly with the FHA renovation loans, they are for your primary residence only. Your next renovation loan is made by Freddie Mac. It's called Home Possible. Now Home Possible is a little bit more flexible because you can use it for primary residences, secondary homes, or investment properties. Now the unique thing is you can buy with 3% down or 5% down with Home Possible. Also, if you're buying investment properties, you can buy with 15 to 25% down. Now, the difference is your Home Possible is made more for energy efficient type remodels, ADUs, more simplified remodels, not high-end luxury. It's made for things that are considered more affordable housing, and it is a great project for people getting into their first home. Finally, there's two very highly specialized renovation loans that will not apply to everybody and not apply to every single area. The first one is your USDA loan renovation loan. This is 100% financing. There's no money down. There's only certain areas that this is allowed. So if you want to find out some of those areas, reach out to me. The second one is your VA renovation loan. This is also more highly specialized. It's only eligible to veterans. And it does have a lot more restricted terms, but it still is a great way for a veteran to get into a home or to even construct a home from ground up with a VA loan with no money down. Now, if all this sounds overwhelming and you actually need more guidance, feel free to reach out to me or another highly qualified loan officer to find out which one of these loan programs best fits your project and your goals. Now let's look at some general requirements for these loans that we went over. Now, most of these loans will require a 680 FICO, but we do also allow different circumstances where we go down to a 620 FICO. Now, these will have a little bit higher interest rate and maybe a little bit more reserve requirements. Next, we're also going to take a look at the down payments. Down payments on a majority of these loans vary between 3 and 5%. Some of the loan programs we went over will require 0% down. And then finally, one of the most important things is going to be the picking of your contractor. For different loans and different heights of programs, loan amounts, some will require one contractor, some will require 2 contractor bids. When you look at your contractor, we will have to make sure your contractor is licensed, bonded, insured, that there hasn't been any claims against them for their work, and that they are in good standings with their current license. Next, we're also going to look at what's called your after improved value. Your after improved value is what is the home worth after all these different improvements, and we have to make sure that what we believe the value is and what your contractor believes the value is both the same to complete the financing of these loans. Now, if all this seems overwhelming and you're unsure about what you'd be eligible for or which one of these programs is the best, reach out to me because we can go over a detailed plan to find out which one of these renovation loans or construction loans is best for your goals, circumstances, and the finances that you have available to you. So to sum it all up, no matter what your project is, all these different loans offer a lot of customization, flexibility, and cost efficiency depending on your needs and goals of the property. And as long as you've taken the time to plan accordingly, as long as you've taken the time to go over your budget, your needs, your goals, and picking the right contractor, all of these different loan programs can provide you great success. Also, not to drive home the same point again, always prepare for things to go over budget. Always prepare for things to cost more than you anticipated. And once again, double check your homework on who you hire as your loan officer for these projects and who you hire for your contractor, because these are going to make massively big differences of whether you have a successful outcome or a horrible nightmare. Now, as you've set out and planned your project, look at the after repaired value of the property and gone, all right, I'm ready to do this. How do you select your loan officer? This is something so beyond crucial. Make sure you do your homework with this. Research loan officers who are familiar with construction loans. Research loan officers that know how to work with projects and know how to help your contractor keep their project online as well. Because one thing you don't want to run into is working with someone that's not familiar with construction loans and halfway through your project, you can't complete it. So once again, pick someone who knows construction loans, research them out, look at their reviews, see how long they've been in business, talk to them. Also make sure they've done projects like this themselves. They've done rehabs themselves, or they've done construction projects themselves, so that they're familiar with what you're going to go through and how to best make this a good experience for you. In conclusion, we've gone over multiple different loans here, from Home Possible to Home Style to USDA renovation loans to VA renovation loans to 203K FHA renovation loans. Each one of these loans has a great loan product, but each one of your projects is different. So make sure you talk to somebody who can help you pick the right loan for the right project so that you can invest in real estate and have a great outcome and have a great place to live in or a great investment. If you want more tips, once again, hit me with a DM. Please don't forget to like and subscribe. Thank you for your time and grateful for you watching. Have a good one.